Every bull market ends the same way, not with panic, but with celebration. Everyone feels like they finally understand the system. Prices climb with no resistance, and optimism feels infinite. But the truth is, that's when the real test begins, not for the market, but for you. So in this video, we're going to run a self-test, a way to check if you're buying into strength or walking straight into a top. You'll score yourself as we go through it. No charts screaming sell now, just data, behavior, and a little self-awareness. Because Bitcoin doesn't warn anyone before a reversal, it just stops rewarding the ones who stopped paying attention. You'll know when we're close to a top, when logic feels unnecessary and conviction feels easy. So let's see where you stand. First question in the self-test. Are you ignoring what the charts are actually saying? Technical signs of a market top don't hide. They just get dismissed when greed takes over. If you've stopped looking at them, that's your first warning sign. Ask yourself this: has Bitcoin been going parabolic for weeks with almost no healthy pullbacks? When a chart looks like it's climbing a wall instead of a staircase, that's a parabola. And every parabola eventually breaks. The last 3 times this happened, in 2013, 2017, and 2021, Bitcoin fell 70 to 85% from its peak once that curve snapped. The next question: what's volume doing? If prices are still climbing but trading volume is fading, that's a divergence, a sign that fewer people are buying at these prices. The smart money sells into that weakness where everyone else believes we're just consolidating. And here's a subtle one: moving averages. When shorter term trends start flattening or crossing downward, the early forms of what traders call a death cross, momentum is fading. That doesn't always mean the crash has started, but it means that you're running out of fuel. So give yourself a point for every sign you've noticed lately: parabola, weak volume, early death cross. If you're at 2 or more, you're not in an early bull anymore. You're near the part of the cycle where the market quietly tests your discipline. Next question in your self-test: are the fundamentals quietly breaking down while the headlines are still bullish? On-chain data often tells the truth before the charts do. The most reliable signals don't come from price action. They come from wallet behavior, transaction flows, and where the coins are moving. So start with exchange inflows. If you're seeing large amounts of Bitcoin move from cold storage to exchanges, that's not bullish. It means whales are preparing to sell. In the first week of October 2025, on-chain trackers recorded more than 37,000 Bitcoin flowing back onto centralized exchanges, the highest weekly total since March. Now that kind of spike tends to happen at distribution tops, not accumulation zones. Next question: what's happening with active wallets? During real bull runs, new addresses surge as fresh demand enters. But when that number starts to flatten or decline while prices keep climbing, it means the rally is being driven by fewer participants, usually traders recycling liquidity, not new buyers coming in. Now, we saw the same pattern before the peaks in 2017 and again in late 2021. And then there's the metric almost everyone overlooks: realized profits versus losses. When profit-taking on-chain starts to outpace fresh accumulation, it means the market is in transfer mode from strong hands to weak hands. That's the moment when optimism still feels justified, but the foundation underneath is eroding. So give yourself another score if exchange inflows are rising, if active wallets are stalling, and if whales are making moves that you can't explain. You're looking at a market that's topping, not growing. Now, the final question in this self-test: who's getting louder, the experts or the crowds? Every major top in crypto has one thing in common: retail euphoria. You see it everywhere. Viral TikToks explaining how Bitcoin is going to $1 million, Reddit threads full of first-time investors bragging about overnight wins, and influencers who were silent during the bear market suddenly posting trading advice again. If the loudest voices right now are promising easy wealth or telling you this time is different, that's your cue to pause. History shows that when retail confidence peaks, smart money quietly starts exiting. In late September, social data showed that Bitcoin mentions on TikTok jumped 340% in a single week. Reddit's crypto boards hit their highest post volumes since April 2021, right before Bitcoin's 55% correction. Even Google trends for how to buy Bitcoin are surging again, matching mid-cycle euphoria levels. Another subtle sign, everyone suddenly agrees. When you can't find a single bearish argument in your feed, when every headline says institutional money guarantees a soft landing, that's the moment risk is hiding in plain sight. So let's score yourself again. If your social feeds are euphoric, if new investors are bragging about retirement from altcoin gains, and if everyone seems to think pullbacks are impossible, you're not in early discovery anymore. You're in peak distribution. When the crowd is loudest, the exit door is already getting crowded. Now that you've gone through the checkpoints, add up your scores. Each red flag, technical, on-chain, or behavioral, is 1 point. If you scored 0 or 1, you're probably still in the expansion phase of the market. Momentum is strong, liquidity is flowing, and the trend is intact. Keep tracking the signals, but don't panic out of solid positions. If you scored 2 or 3, you're in the warning zone. That's when smart investors start adjusting, taking partial profits, tightening stops, or rotating into Bitcoin and stablecoins to preserve capital. It's not about timing perfection, it's about protecting what you've already earned. And if you hit 4 or more, the writing is likely on the wall. That doesn't mean sell everything in one move, but it's time to acknowledge that the market may be transitioning from euphoria to distribution. Now, historically, that's when prices stop rewarding late buyers and start rewarding the patient ones who quietly step aside. In 2021, investors who scaled out gradually 10 or 20% at a time during the first signs of these red flags kept 60 to 70% more of their gains than those who held forever. In 2025, with ETFs, liquidity cycles, and AI trading models amplifying every move, awareness isn't optional, it's the edge. So if this self-test made you realize you've been chasing tops or ignoring the data, take it as a win, because that awareness alone already separates you from most of the market. Now again, the goal isn't to predict every correction. It's to make sure that when the music stops, you still have a chair. Every bull market feels endless until it ends. The difference between those who thrive and those who repeat the same mistakes isn't luck, it's awareness. Learn to read the signs, act with discipline, and remember that realizing profits is not weakness. It is a very, very good strategy. For tools and tutorials that help you understand market timing and managing risk with confidence, visit learningcrypto.com. Stay informed, stay patient, and stay ahead of the next cycle. Thanks for watching. I'll see you in the next video.